My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people want to make friends, just trying to save you some money. My job is not just to entertain you, but to educate, teach, explain days like today. I want you to call me at 1-800-743-CNBC. Please tweet me at Jim Cramer. I want you to get used to days like today. Days where the Dow plunges up 1,063 points, S&P plummets 3.56%, and yes, the NASDAQ goes down almost 5%, 4.99. See, what's happening right now is the market is repricing stocks, your stocks, on the fly, with Wall Street deciding that all stocks are worth less every time a thing called the 10-year Treasury, it's what the Treasury borrows at on a 10-year basis, ticks down in price and up in yield. Yep, I mean it every time. And that's what happens in this stage of runaway inflation. Frankly, it's the only touchstone to trust, even as it smells real bad and you wish it were not happening. 3.5-year high on the 10-year does that. Now, it's been so long since we had a market like this that I think many investors mistakenly believe that the Fed is in charge of all interest rates. It's just not true. Long-term rates are controlled by investors around the world, and they clearly believe you can't own U.S. bonds here because they keep going down in price. These guys are losing fortunes owning U.S. Treasuries because of inflation. So they wanted Jay Powell to take a more aggressive approach to tamping down inflation. In other words, they want the Fed to engineer a recession. They wanted to hear that 75 was on the table. They wanted to hear that he might raise interest rates a full point. They want a recession, and it's not what they got. Now, the stock market has always been closely related to the bond market. They're practically joined at the hip, except the bond market is much bigger and much more powerful than stocks. If bond yields are going up, that's because investors are afraid of inflation and don't believe the Fed can get it under control with a series of meager 50 basis point double rate hikes. They expect 75 basis points, triple rate hikes, an idea that Powell took off the table yesterday. But when you look at the action in long-term treasuries, it's clear these bond sellers don't believe he can keep it off the table. I've got a lot of confidence in Jay Powell and what he's doing. The bond market has no confidence in Jay Powell and what he's doing. But let's step back for a second and be curious about stocks, not bonds, right? Now, as my old friend and mentor, David Darst, who used to come on the network a lot, taught me when we were at Goldman Sachs together, the key to stock picking, actually the key to making money, particularly, we had a lot of bad days together, it was a tough time in the 80s, is to be curious. Now, you've probably never heard that before. It's to be curious. But curiosity helps you a great deal when you're trying to make money because it forces you to answer certain questions. First, is every company really worth less today than it was yesterday, which is what the stock market is saying? The answer is no. If you take your cue only from the bond market, we're headed for a high inflation world where the Fed has to raise interest rates aggressively. That means you should buy stocks that do well. If you say you believe that do well in a high inflation slowdown, the Jimmy Carter scenario. Think the oils, like the ones we have on later. Think Pioneer Natural Resources, with its huge base plus variable dividend. Same goes for Coterra, Diamondback Energy, Devon, as I talked about on today's conference call for CNBC, because you know I love the oils. That's my CNBC Investing Club mantra. I love the oils. Second, will the Russian invasion of Ukraine or China's rolling lockdowns last forever? Of course not. Yet right now, stocks reflect a never-ending war and a never-ending lockdown. Even if China doesn't do anything differently, we know from experience that these lockdowns end after a few months at most. Once China goes back to normal, and it will, you could see insane rallies in stocks like Nike and Starbucks. By the way, Starbucks is paying you to wait with a 2.5% yield, and Howard's running it again. As for Nike, the worldwide sales are terrific without China. But nobody wants to own this stock without the substantial Chinese business. Sooner or later, though, the lockdowns will end, and Nike's Chinese sales will rebound. Might happen even faster if the Communist Party comes to its senses, changes its mind, and embraces the Pfizer, Moderna, or Pfizer, by the way, is a BioNTech, which they have. They're just choosing not to use. Speaking of changing minds, we know that Putin can't come up with something that he can spin as a victory in Ukraine. He can't keep his job, and he might not even keep his life. He's got to find something to say. He'll keep sending troops into Ukraine, even if it's clear that he can't win, because pulling out makes him look weak, and that's a death sentence for a dictator. But there are real-world constraints here. Sooner or later, the war will end, either with an assassination or with one side running out of soldiers or hardware. Right now, the war seems endless, but a curious person would never accept that verdict. Third, a curious person would question whether our current bout of inflation is really as deeply entrenched as the bears say. In the last week, I've heard of peaks in grain, steel, aluminum, copper, used cars, palm oil, soy, freight, and storage. That sounds like a trend to me. When only oil and natural gas continue to hit new highs, maybe this inflation's easier to beat than most people expect. Fourth, if you're curious, you have to wonder if earnings still matter because the broader market's behaving like they don't. But let's take the case of Advanced Micro, AMD. It recently closed on a massive acquisition, Xilinx. When AMD bought the chip maker, we thought it was generating high single-digit growth. They weren't allowed to talk because of the deal. It turns out that Xilinx is growing at 20%, not high single-digit. That was what's called a surprise. Yet AMD stock has come way, way down from its highs. You're getting this Xilinx news for free. When you see something that revelatory and you know it's immediately additive to earnings, how can you not think the stock's a buy? If you're selling it, I know why you're selling it. You're selling it because everyone is selling everything, not because everyone is selling AMD. Then there's Facebook, now Meta Platforms. When things get really negative and you hear that Facebook isn't hiring or slowing its hiring, you presume, Wall Street presumes the company's in trouble. But when you're running Facebook, you can choose among the best engineers in the world, senior engineers. At this point, they're available. Why bother hiring junior ones? We know there are engineers being laid off all over the place. Mark Zuckerberg can take his pick. That's why I'd be a buyer of Facebook here, not a seller. And I said so on our CNBC Investing Club call that was done at noon that you must listen to. If you're curious, by the way, you recognize that this is one of those stocks that does get cheaper as it goes lower because their earning power is tremendous. Now, I know the averages are trading like everything's overvalued. But remember, for every negative, there's a company that's profiting from it. Right now, the big worry is inflation. So what's the most inflationary part of inflation? Natural gas. Who makes the most money off natural gas? Coterra Energy, arguably Enbridge for pipelines, and I like Sempra, a utility with a major nat gas transportation business. These companies are paying you to wait, too. Coterra's got a 7.5 yield, Enbridge 6, Sempra 3, but great growth. I know. It's a disgusting, horrible market that rests entirely on the fortunes of one piece of paper, the 10-year Treasury. But a curious person asks if this one piece of paper can really control the future of every company in the world. And where is it written that the 10-year must go down in price and up in yield every single day? Where does it say that every unemployment number, like the one we're going to get tomorrow, will remain overheated? Where does it say that May must be hotter than April when we know that the Fed will keep hitting the brakes on the economy and people will be scared to start a business or have excess inventory? How can we be so sure that Jay Powell won't raise interest rates as aggressively as he needs to? Right now, I think the market's anticipating the worst-case scenario, and there's a good chance that we actually don't get it. Or one more. Let's say you own nothing, no stock at all. You're just tuning in for the first time. You're all in cash. Wouldn't you be tempted to buy something down here? Is it your lack of cash that makes you feel desperate? Are you in that much of the wrong stocks? If you've got enough cash on the sidelines, the market's throwing a sale on everything, including some great stocks with good yields that have great prospects that are going to beat the earnings. The kinds of stocks my trust bought today during our club call. Bottom line, it is so easy to panic. It always feels great when you sell everything at that one moment. It's hard to be curious when your head's getting beat. I'm getting beat over the head by a 2x4 here. But over the long haul, curiosity tends to be a much better bet. Right now, I think a curious mind will be buying stocks selectively and not selling them indiscriminately. Curiosity might have killed the cat, but it can also make you a fortune. Let's go to David in Florida, please, David. David.
I was looking at their reports from about a week ago. It looks very enticing, and I want to ask you on your opinion on General Motors.
All right. Now, this is at the crux of what I'm talking about. GM has no dividend, okay? It sells at 5 times earnings, and people think it's going to lose a lot of money. It's not going to lose a lot of money. It's down 32% for the year. It won't always not pay a dividend. I think that GM at 39 represents value, but it could go to 35. If you can't handle that to 35, then wait till it goes there or don't buy it at all. All right, panic is not a strategy. I think being curious about these is a much better way to riches. A curious mind would be buying stocks selectively, not selling them indiscriminately. On Mad Money tonight, the energy space held up amid today's big sell-off. Is it time to look to the oil patch where the real value might be? I'm eyeing one of the few companies that ended today in the green. Yes, don't miss my exclusive with Pioneer Natural Resources, the highest yielding stock in the Dow. Then the market has mowed down Scott's Miracle-Gro. I'm using it this weekend. This is the weekend where I'm going to plant my boxes. But there are analysts who like it and analysts who hate it. We got to figure out which one is right so we can make some real green. And Shopify is on sale today, stock dropping 15%. What is it signaling for the rest of e-commerce? Is the company doing fine and it's just the stock market that's angry? I'm talking with the company's top brass after its report. Stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.